Hi, good afternoon, everyone. Good evening. Okay, it's my monthly seminar again. Okay, this is Elki from M Plus Online. Okay, good evening, everyone. All right, glad to see you guys here today. Okay, today this section will be a little bit. This is actually a revision section. Okay, as you guys can see from the title, it's a revision on Fibonacci retracement that I shared with you guys last year. Okay, last month we had a section. On Fibonacci extension and also projection. We touched a little bit on the Fibonacci retracement. Okay, so I received some requests that they want to review and look through back all this Fibonacci retracement, because from the last month section we know that extension and projection is more towards to tell us where to take profit, where to get out, while the retracement, it will works really well to help us to determine where to get it. Okay, so for those who want to revise, review and relook into this Fibonacci retracement, have a new fresh memory, so you guys can join the section today. Okay, so good evening, everyone. This is Elki here today from M Plus Online. Okay, so this is my picture, but this is pre-MCO picture. Okay, so I believe the MCO that lasted for more than a year has changed many of us. So maybe right now, you guys, if you pass by me in along the street, hopefully we can see each other on the street very soon. Okay, you guys might not able to recognize me, but okay, we are still here. Okay, so for those who are really new here today, let me introduce myself a little bit. Okay, I'm a dealer with M Plus Online, and I in this industry since 2012. Okay, so I started as a futures dealer, and since I was doing futures, I really interested in all these equities, stock equities, all these things. So I was focusing very much into FKLI, the futures for the FVMKLCI, Dow Jones Industrial Index, Nasdaq, all this. And I was given this chance to engage seminars with CME, Bursa Malaysia, Compass, and etc. etc. Okay, so after 2 years as a futures dealer, I was so fortunate enough to be chosen and trained as a PDT, proprietary day traders. Okay, whereby the company gave us a sum of fund, and then we trade for the company for short-term trading and positioning strategies, trading, all these things. And that was actually the time where I really picked up all this knowledge and the things that required and essential for to be a trader, and I have been practicing all of them until right now. Okay, so that actually built who am I, and that also makes me to be here today and share with you guys all these things that I have learned during my time I was being trained as a professional trader. Okay, all right. Okay, so welcome you guys to my webinar section today, my sharing section today. So today we will be looking into Fibonacci retracement. Okay, so for those who know what is Fibonacci retracement, or you have been practicing Fibonacci retracement, then this session could be a little bit dull, a little bit boring for you guys, because it's really for beginners, for one who do not know how to use Fibonacci to like really look into it and start hands-on on this technical trading tools. Okay, and this section I skip a lot on all this theoretical stuff. Okay, but we will really focus a lot on the practical. One of the reason why is because last year I had the section that introduced what is Fibonacci, all this thing, and I just don't find the reason to repeat the whole thing again. Okay, so if you guys want to review it back, what is Fibonacci, what is actually this Fibonacci means, who actually invented Fibonacci, all this thing, the theory behind all this thing, you guys can always scan this QR code. Okay, this QR code right here, it will link you to last year video. Okay, this year is like just a review, and then we will focus more onto the case study, and also review some of the basic principles on Fibonacci, so that when you guys use it, you guys can always use it in, I don't want to say the correct way, but in the way that it was intended to be. Okay, so of course, today I allocate a lot of time for Q&A section. Okay, so for any of you right here, if you have attended last year Fibonacci section or last month Fibonacci sections, today is an avenue for you to ask all your questions. That's why I allocate a lot of time for Q&A. You can see we have Q&A right here at the starting, and then question and answer at the end of the sections. So we have Q&A. I don't think any of the speaker right out there, they have two Q&A section in one section. Okay, so if you have any questions, then you can start throwing in right now. So in between of the case study or what, then we can visit and we can talk about it. So hopefully like this, it will become more lively. Okay, and you guys won't fall asleep lah. Okay, all right. Okay, Fibonacci have advanced class. Yes, actually, if you want to look into really advanced, I won't say advanced, because Fibonacci, there are so many ways to use Fibonacci. If you already master the basic of like this retracement, extension, all this thing, then you can explore into some other TA tools that they actually keep on using Fibonacci, like Gutly, like butterfly, all this, yeah, all these patterns. Okay, they in the way of using Gutly or all this thing, they apply a lot of Fibonacci theories inside. Okay, so for Fibonacci, okay, so right now is the section of answering some of the questions before we start to review on all these basic principles in Fibonacci. Okay, so later on, Fibonacci is actually very suitable for trend trading. You can do it in it's a trend trading tools. You can trade along with the swing. You can trade for short term, intraday also can. Okay, it depends your personal time, how you allocate your time, all this thing, how much time that you have for this market. Okay, and yes, Girati, like I said, Fibonacci is the tool that we use to get in. Okay, it's the tool that help us to get in. For me personally, I would say that Fibonacci, it's never about Fibonacci is suitable for all time frame or not. It's the matter of products, whether the product is suitable for all the time frame or not. Okay, so let's say if when I was trading more those higher volatility products, like Dow Jones $5 last time in dealing with futures, all this. Okay, every minute the movement is very volatile. Okay, so I can easily use Fibonacci or any other technical trading tools on 1 minute charts. Okay, so even when I was trading local FCPO, we are trading on 1 minute chart, whereby my fastest entry and TP will be the minutes the second I click buy, the next second I click sell, and then it's all match, I'm already out. Okay, so just within split second I'm out already. Okay, so for stocks wise, whether is it suitable for you to trade on M1, or is it suitable for you to trade on M15, M30, or daily? Personally, for me, I always use it for daily. Okay, but under some circumstances, I will look at M30 minutes chart to look for some signals for maybe like BTSD, buy today, sell tomorrow kind of strategies, to find where the volumes of momentum are there or not for the continuous move, all this. Okay, so yes, we might look. I might look into other Fibonacci tools out of this. Last month we did Fibonacci Extension. Next month I might look into other thing first. Okay, otherwise maybe later people too bored with Fibonacci already. Okay, all right. Okay, so you guys keep posting the questions. Okay, So we will go through some of the basic principles first. Okay, so after that we will come back and look into some of the questions. Okay, so basically when we are going through all this, some of the basic principle, it might answer some of your question as well. Okay, so the basic principle of the Fibonacci, okay, first is the ratio. Okay, is the ratio. Basically Fibonacci ratio is derived from Fibonacci number series. Okay, it starts with 0 and 1 and goes to infinity. Okay, so if you want to know the details, you can always go into my command. My helper have put up the link for the last one section and also the previous section. Okay, all right. So if we take the ratio of the two numbers in the series, then we get the golden ratio, which is the Fibonacci ratio that we are using today. Okay, the value is around 1.618. Okay, and the inversely reciprocal of 1.618 is 0.618. Okay, so basically for Fibonacci, we just focus Fibonacci retracement. We are focusing on this few key ratio, the golden ratio 0.618 and 1.618. Okay, and other key ratio that I'm also looking at when I'm using it for is 0.382, 0.5 and 1. Okay, so for beginners, you do not need to be confused by too many numbers right over there. Just focus on a few. Actually, you can just focus on 0.382, 0.618. Okay, these two are the Fibonacci numbers. 0.618 is the golden ratio, and why 0.382 is because if we take if we use 1 minus 0.618, then we'll get 0.382. Okay, so the remaining of the 0.618 is 0.382. Okay, it looks clearer when it comes to the chart. Okay, so for all the M plus user, okay, for all the M plus clients, you can find Fibo in our chart. Okay, yeah. So what can you do is you just launch our M plus Wiz chart, Wiz Lite. Okay, you should able to find Wiz Lite in your platform for all our clients. Wiz Lite is free accessible for all our clients. Okay, how do you find it is after you log in, you just right click and then run M plus Wiz Lite. Okay, the interface is exactly the same. Okay, it's exactly the same with our M plus Wiz Pro, just that Wiz Pro we have additional strategies, that's all. Okay, but the interface, all these things, they are the same. Okay, and you can find the M Fibonacci right here. This is all the Fibonacci tools that we are providing. Okay, we have arcs, we have timelines, we have retracement, we have fan, we have projections. Okay, so basically the one that we will be focusing tonight will be the Fibonacci retracement. Okay, Fibonacci retracement. All right. Okay, so if we look back into our slides, basically like what I say right here, you just come to this something like a rainbow kind of symbol. You click and then you can find the third one, Fibonacci retracement. Okay, so once you click it, you're able to draw up Fibonacci retracement ratio in this way. Okay, so when you put thing up, you will see a lot of lines. Okay, so don't worry, you just focus on 0.382 and 50% and 61.8%. so basically how do you draw the chart is, let's say for if we look at, okay, if I look at high tech, okay, let's assume that this is the high for high tech. Okay, this is the high for high tech. If I press the Fibonacci retracement, I'm gonna click on the high, okay, and drag all the way down to the low. Okay, the low, the starting of the impulse. Okay, the starting of the impulse move. Okay, so basically you can just click on the point. You can see you can click on the point and move the numbers. Okay, you can click on the points to move the numbers so that you can see it really clearly. Okay, So you can see right here, you will see so many lines right over there, and don't be confused. Just focus on what you should be looking at it. Okay, adjust the chart. You just focus on 0 to 100%. Okay, 0 to 100%. Okay, focus at this three: 61.8%, 50%, and also 38.2%. Okay, 23.6 and 78.6 at this moment. Don't care. You don't care about them first. Okay, just focus on these three. Okay, these are the three key ratio that we are doing. Okay, if today your chart is not providing you the Fibonacci retracement, yet you want to trade on Fibonacci retracement, any way that you can do it, yes, you may. Okay, because the theory for Fibonacci retracement is very, very simple. What it does is basically it takes the total move, the total amount that it moved from this point, the low, all the way to up. So if you take the top point, the highest point, 4.82 minus this 1.96. Okay, if we use 4.82 minus 1.96, okay, let's use 4.82 minus 1.96. Okay, then we get 2.86. So the whole range is 2.86. Okay, if we take the 61.8%, 61.8% of 2.86 is 1.76748. Okay, 61% of this move is 1 ringgit 70, around 1 ringgit 77 cents. So if we add from the lowest point plus 1.96, then that equals to 3.73, which is right here, 3.73, which is the 61.8%. Okay, so this 61.8%, it represents the 61.8%. Okay, 61.8% of the move. Okay, this whole move is 61.8% of the total rally. Okay, so of course, if you use the total range divided by 50, then you plus from the bottom, then you get this number 3.39. Okay, basically that's the idea, the backbone idea for Fibonacci. All right. Okay, so once you understand this, even today your chart is not providing you a Fibonacci retracement tool, you will still able to draw it from scratch. Okay, and that is something that we are practicing. We are practicing to able to eyeball the chart to know approximately where is 61.8%, where is 50%, and where is 38.2%. Okay, all right. Okay, so the basic principle, the really important principle for Fibonacci retracement that I hope you guys remember is, it is a trend trading tool. This tool is used for trend continuation. You want to trade along with the trend. So when we are talking about trading along with the trend, what does it mean? Okay, what does it mean when we are trading along with the trend? Can anyone tell me what does it mean when we are trading along with the trend? Okay, meanwhile I answer some of the question. Okay, Dave saying use it to find support line. Yes, correct. I also use Fibonacci to find the support line. Okay, Fibonacci need to combine with other indicator to enter. Basically, I just combine with one tools that I'm gonna share with you all just now. Later, I'm gonna share with you all later how I use Fibonacci to find the entry and how to decide my entry. Okay, Fibonacci mainly is used for prediction. Extension and projection is for prediction of the where is the high that it might go. Okay, as for the retracement wise is to see where is the potential support, where are the potential support, where is the potential low point. Okay, so it helps us to look for identify that is the potential low point, and then we buy. Okay, and okay, all right. So to erase the Fibo lines, you just click the erase button will do. Okay, riding the trend, live trade, surfing the wave. Okay, got one asking the Fibonacci need to pull from the high to the low or low to the high. Basically, it's the same because regardless you are pulling from the high to the low or low to the high, the range, they are the same. The range, it doesn't disappear. Okay, so but basically for M plus Swiss light, okay, I usually click from the high to the low so that my the percentage that more than 100%, it will be on top or above the 100%. Okay, so that my 100% won't be at the bottom. So basically I would drag from top to the bottom. Okay, let's back to our questions. Just now I was asking if today we are trading along with the trend. I can see some asking riding the trend, live trade, surfing the wave, maximize the profits. Unfortunately, no one hits the answer that I want. Okay, so basically when we are talking about trading along with the trend, many people will have a little bit difficulty to trade that. One of the reason is because when we are trading along with the trend, okay, that means it must have a trend first, right? In order for us to trade along with the trend, then it must have a trend first. So in order for it to have a trend, means the price must move first. Okay, but many of the traders or investors outside, what they always look for is they always look to buy at the low. Okay, buy at the lowest. Okay, I don't want to say low lah, it's at the lowest. Okay, but if we are trading along with the trend, we can never buy at the lowest. We will be buying high. We'll be buying higher than the lowest, but we are expecting the price to go higher. Okay, so basically you are buy high and sell higher. We are expecting the price to go higher. So one key thing that we need to overcome when we are trading along with the trend is we must understand that we are buying high, we are buying higher, and we are selling even higher because we believe the price can continue to go higher. And eventually when the price continue to go higher and skyrocketed the price all the way up, then only we know that we actually bought at so-called the low side. Okay, so when we are entering and buying along with the trend, okay, buying on the trend, we can never expect that we will buy at the low. Okay, we have to buy high, sell higher, and we cannot have the fear. Of course, if the price shoot up more than 300-400% within last 1 week or 2 weeks, then it's normal to be afraid. I also will be afraid. Okay, because it's not reasonable for the price to move up so high in such a short time frame. The market needs to take a break. The market need to take a break and let people to take profit and exit. Okay, all right. So for Fibonacci, it is trade on an established trend, and like what I said, we are expecting a further move on the existing trend. Okay, so this Fibonacci retracement, what it does is it helps us to spot the entry to get in after we see the initial rally. Okay, or if we are in the rally, we took profit, but we think that the potential of this stock is still there, then this Fibonacci retracement, it will able to help us to find the spot where to get back into this counter. Okay, yeah, Suresh, you are totally right. Entry price when the price pull back. So that's why many people, they love to describe a Fibonacci as buying on the dip. Okay, when the price it went up high, pull back, then it's the time for us to buy. Okay, so before we use Fibonacci, the first thing that we need to really do is we really need to identify that this stock is going on a trend. And one way that you can use, one way that that you can easily to find a trend is you may use EMA 20. Okay, personally I always use EMA 20 to help me to identify whether is there a trend ongoing. Okay, so when you see the price keep on moving above the 20 days moving average, like right here, over here, you can see that the trend is going up. Okay, and when there is pullback, from the trend coming back down, then that is the time that we know that this is the high and this is the low. Okay, so I want to put my Fibonacci retracement from here to here. Okay, from the high to the low to find where is the potential support, because I miss out to buy on maybe this breakout or somewhere around here. I didn't buy it, and this gives me a chance to participate back into this counter for the rally. Okay, and I believe that happens to many people, especially when you see, hey, these stocks I keep on wanting to buy, I don't want to buy, and the stock move up already, then I don't know what to do. So what you can do is watch out for how the trend is developed, identify whether the trend is strong or not, pull back, then you start plotting the Fibonacci, look for the 61.8% level, 50% level, 38.2% level, which are the levels that it tells you that you can go in. These three levels potentially can be the support, okay, and you might be able to go in from there. Okay, so this is a trend. Okay, similarly on Top Glove last year before the rally, okay, we can see Top Glove has been trading without a trend. You can see it's trading on a sideways, okay, on a rectangle, and then we see the breakout. Okay, you can see the price constantly move away from the 20 days moving average, okay, and pull back. All right, then Andrew also similarly on Andrew, you can see sideways the rally. So once we spotted that it has this rally, okay, we didn't buy on this rally, or we bought and we took profit, we want to get back in, then we can use Fibonacci retracement. Okay, then how to execute the buy on this Fibonacci retracement. Okay, so before I go into that, if you so far until right now, for the first 30 minutes you like our section, okay, do feel free to like our video and share it to your friend, okay, so that your friend can benefit from this section, and also they can share to the others. So spread the love. All right, okay, so help me to like and share the video out, so that even for those who are not able to join the section right now, they can play back later. Okay, all right, thank you very much. Okay, so let's continue with the buy execution. So right now we identify the trend already, then how are we gonna execute the buy? What makes us to click the buy button? That's the million-dollar question, right? Okay, so like what I said, we look for the pullback, and what we want to look for is we want to see if the price gonna support at any of these three levels. If yes, then that is the time that we want to consider whether to buy or not. Okay, that's the time that we want to buy. Okay, and how to execute? I basically identify into two types of executions. One, for more advanced trader, for seasoned trader, you can identify which are the bullish reversal candlestick. Okay, bullish reversal patterns. The candlestick rebound, then you buy. Okay, if we hit the golden ratio levels, start rebounding, forming a significant bullish reversal candlestick, then you buy. Okay, that's the fastest way to get in. Okay, for those who need a little bit more time to think, and you are trading, you don't mind holding for a little bit, you have a further stop loss, then you can buy at the resistance breakout or the recent high breakout. Okay, you wait until the breakout, you buy into it, you hold through the trend. Okay, but today we will be really focused on the very first type. Okay, the bullish reversal candlestick rebound. Okay, because personally I have been practicing on this type of entry, this type of method. All right, okay, So let's also review some of the bullish reversal pattern. These are some of the bullish reversal pattern that I have been using. I'm not gonna share all of the bullish reversal patterns. Otherwise, tonight we're gonna start ordering supper and sitting here until 12 o'clock already because there will be too many candlestick patterns to cover. All right, okay, but I'm just gonna focus on three. The very first one is bullish engulfing, morning star, and piercing line. Okay, these are the three bullish reversal pattern that I always rely on. Okay, bullish engulfing, morning star. Okay, it can be either one, and also the piercing line. Okay, if you want to know more, you can always scan this QR code to our another video by my colleague Zhu to learn the 10 simple reversal candlestick. Okay, so I'm gonna start answering some of the question right here. So, meanwhile, some of you guys might want to scan the QR code or take the picture. Okay, so let's look at some of the questions. Okay, Gloria is asking where is the erase icon. Okay, Gloria, I'm gonna share with you where is the erase icon later. Okay, when we go to the chart. Okay, then how do we pick the highest and the lowest? Okay, Johnny. Okay, just now we were sharing about time frame. It depends on your trading time, your trading behavior. If let's say if we are using the daily one, how do we know where is the high and low? Is when the price start retracing, then we know that is the high. We can never know where is the high when the price still continue to go up, right? So when the price start coming down, then we know that is the high, and we can start plotting from there all the way to the lowest point, to the lowest of the starting of the momentum. Okay, similarly, if you are plotting on a downtrend, okay, when the price start rebounding, then you know that is the low. Then you can plot from the low to the high. Okay, so what if the candlestick break 38.2%, 38.2 level cut loss? Okay, so Victory is asking about cut loss. Okay, for me, when I'm just now we were mentioning about the entry based on the bullish reversal pattern, right? Okay, let's say today I'm entering based on bullish engulfing. It formed the bullish engulfing, and I enter. Okay, basically we can know that the price retrace. This is the low point, and it rebounds, and I'm buying somewhere around here. Correct? Okay. Let me put up the laser point. Then I'm buying somewhere around here because for the bullish engulfing confirmation breakout, it will be somewhere around here. Okay, when I'm buying somewhere around here, my stop loss will be the low of the bullish reversal signal. Okay, because if the price it doesn't continue but drop all the way down and break the lowest point, then it's telling me the bullish reversal signal is no longer effective. Okay, the bullish signal is no longer effective. Then I really want to cut loss and get out. Okay. Similarly for Morningstar, you can see the long red bar, doji or hammer, and then the green bar reverse. Okay, so if the price drop all the way back down to hit the low of any of these three candles, okay, the lowest point of these three candles, then that will be my stop loss as well. Okay, similarly on piercing, when I enter, it could be somewhere around here, then my low will be the lowest of these two candles. Normally the piercing line, the green candle, it opened lower, trade a little bit lower and rebound, so it should be the low of the green candle. Okay, so the cut loss wise, it will still follow the candlestick cut loss. Okay, it will still follow the candlestick cut loss. Okay, Inchi Abdurrahman is asking, can we use Fibo when the market trend is sideways? Okay, so that's why you can see just now we have been emphasizing on the principle, the basic principle of Fibonacci. What is the basic principle of Fibonacci? Can you guys tell me? obviously I cannot hear lah. Okay, but it is Fibonacci is a trend trading tools. So when the market trend is going on sideways, then obviously, unless you want to plot the Fibonacci in maybe like 1 minute or 5-minute charts, which is not sideways in a smaller time frame, but if you are using daily and it's a sideways trend, then obviously you are not able to use Fibonacci, okay, because you are not able, there is no trend right over there, okay. And when the market is sideways, you are not expecting that the momentum can just come from nowhere and then break out and go higher, okay, because when we are trading on Fibonacci, we are trading on the trend, and then we are expecting the trend to continue to move higher, the price continue to move higher, the momentum is still there, okay. So especially you can see even when the trend is there, if you feel like, if you have the market feeling that, okay, this stocks, even though it's continue to go higher, but the momentum is not there, then you don't want to use Fibonacci and trade, even though it hit the any of the three levels, the golden level, ratio levels, and rebound. Then you might don't want to trade because you already sense and feel like the momentum is not there to push it for another high. Correct? When we are using Fibonacci retracement, we are expecting the momentum to continue. The momentum are there and it will continue. So that's why we are still want to buy in when the price retrace, pull back, and start rebounding. Then we buy. Okay. Okay. So when we set up the Fibonacci, we need to wait for the price to start pull back. Start to pull back. Then only we can know where is the high mark. You can plot when it is moving, but every day when it is breaking another high, then you need to keep on updating the Fibonacci every day when it's breaking higher and higher. Okay, so for me, I just wait until the price start turning down. Just start turning down the first day, second day, start turning down, then I can start plotting already. Okay. Yeah, so I can see many people they answer that it is trend. Yes, it is trend. Okay. Okay. So I'm not gonna answer on the time frame thing already because at the beginning I already have been explaining really clearly. The time frame is never about the technical indicator, but it is about whether your trading time frame. Okay, I can use Fibonacci on daily, I can use Fibonacci on 15 minutes, I can use Fibonacci at 1 minute. Okay, okay, so there is one, Joy is asking, Fibonacci can use for uptrend only and cannot use for downtrend. No, you can use for downtrend. If you're able to do short selling, you can always use for downtrend. When the price rebound to the three levels and reverse start coming down, forming the bearish reversal, then you can start doing the short selling. But unfortunately right now, for retailer, we are only allowed to do intraday short selling, and as of right now, we are not the feature for IDSS intraday short selling is not enabled yet. So for this session, we will really focus on the buy side. Okay. All right. Okay. So I believe for those who want to scan the QR code, you guys are pretty much scanned ready. So next, move on. Okay, next move on to some example. Okay, after talking so much theories, all this thing, then let's look at some example. On the first one on QS. Okay, just now previously we already spotted the rally. Okay, we spotted the rally. The price start coming down. Okay, we identify that this is the trend. This is the uptrend. Then what should we do? What do we do is we plot from the high to the low. Okay, very obvious that we can see this is the starting of the impulse, this impulse wave. Okay, so we start to plot from the high to all the way down to the low. Okay, okay, so once we plot from the high to the low, this is what we will get. Okay, this is what we will get. So we can see that this is 61.8%, 50%, and 38.2%. Obviously, on this chart, we can see that the price is well supported near the 50% level. Okay, can you guys see that? Well, every time when it comes to 50% level, it forms the tail and start rebounding. And if you realize, this is the first bullish reversal that appears. Okay, so we will assume that the first approach that it comes to 50% level, rebound, form the bullish reversal signal, then we buy. We buy somewhere around here, 57 cents. Okay, I'm not gonna tell you that, oh, I know that it's gonna come back again, then I only buy here. Okay, at this point of time, we do not know whether the price will continue all the way V-shape up to the high, or it's gonna continue to go for some time. Okay, we do not know. But what we know is we buy here, and then we put a stop loss here. Okay, at the low of the tail, as I was sharing with you guys. So we will follow this theory from now and the rest of the sections. Okay, so bullish reversal, we buy. Okay, we buy on the reversal, so we buy it here, and then we need to suffer a little bit lah. We need to kanchong a little bit. Okay, suffer a little bit, worry, the price come all the way back down. Shit, we are down 10+%. Okay, but it still haven't hit my stop loss. Okay, but at this point, during this period of time, we can see the price is really well supported at the 50% area. And do you guys realize that this is another bullish reversal signal? Bullish engulfing right here. Okay, bullish engulfing right here. Then we have inverted hammer right here, and another long bullish bar right here. Okay, so basically, if you're able to read, you can see at 50% level, there are 1 bullish signal, 2 bullish signal, 3 bullish signal. The reversal, the long green bar telling me the momentum with the increase of the volume after the volume has been diminishing. Then you know that this is the time that if you have more bullets, if you're confident, this is the time that whereby you might want to add another position right here at 53 cents. Okay, so you have one at 57, one at 53. Okay, of course, I can so confidently say because it's gonna go up. I do the slice amount, of course I know lah. All right, okay, but this is the way we identify it. Okay, so even I do not know what's the next chart, and I'm looking at this chart, I will say this is a very confident call for the buy, for the up. Okay, because 1 bullish signal, 2 bullish signal, 3 bullish signal, and the long green bar. After the pullback, there's no volume, long green bar. So all this built into a highly confident, high probability trade. Okay, so see what happened next. Okay, if make the move, pull back, continue to go higher. Okay, so you can see right here I'm very confident. Okay, right here I'm very confident that it will continue to go higher, but still it takes another ride before the strong move, the really strong move come. Okay, so you can see even for me who have been reading on the chart, all this thing, when the price come back down here, I will doubt myself also. Shit, oh my god, am I reading it correctly, all this? But still I will follow the stop loss, the rules of trading. Okay, and for the buying right here, I will still follow this as my stop loss. Okay, but even if you realize, it never threatened the low for this low anymore. It's a higher low, and then it went all the way up. And from here, where is our entry? The initial entry, it up almost 30%. Okay, almost 30% in 2 months time. And this is daily chart. And the same theory, the same methods you can apply on any other time frame, any other products. Okay, all right, next example, top glove. Okay, same thing. Just now we identify that this is the This is the rally. Okay, we can see the price start pulling back. Okay, what do we see is for the first pullback, it never even touched the 61.8%. Okay, it didn't touch. It tried to make a rebound. Okay, then have another sharp drop. Okay, to 38.2% and rebounding, reversal. Okay, so another inverted hammer right here. Another inverted hammer right here. Okay, another inverted hammer right here. So we will say that this is the bullish reversal signal that we are looking at, and we will be buying somewhere around here. Okay, at 1 ringgit 84 cents. Reversal from 38.2%, bullish, significant bullish reversal. Okay, we are buying somewhere around here. Okay, so you can see the execution for Fibonacci is very simple. Identify the trend. When it start pull back, plot the high and the low. Okay, then you look for these three levels. Look for the significant bullish reversal signal. So for the practice of Fibonacci retracement, what is really important is how strong is your chart reading on the candlestick pattern. Okay, how strong is the chart reading? All right. Okay, so if you're buying here, what happened next is you can see the price continue to go higher and higher. Okay, until we see a long upper tail candle and start retracing. Okay, I won't call this a shooting star. Okay, I won't call this a shooting star, and start coming down. All right, so from the entry right here all the way until the highest, there is a potential of 18.6% profits to take. Okay, 18.6%. Example number 3, Anju. Okay, similarly, we identify the upward move. Okay, and what you guys found right here is at this for Anju, we don't see the pullback to 61.8%. Okay, normally if I'm trading for Fibonacci retracement, I will be really careful if the price just stay above 78.6%. It didn't come to 61.8%. I will be really careful. Okay, the reason why I will be really careful is because the market, the pullback, it wasn't that much. The market might not haven't digest the buying too much. Okay, meaning the people inside might still not profit taking. So if the price continue to push higher like this, for this case, it continue to break higher, I will have this concern that the price might this upward move might not sustain. Okay, so if you are trading on Fibonacci, when you are seeing the price just touch a 78.6% and rebound from the significant reversal, yes, you still can trade, but you, for this kind of scenario, you want to see money, take money. You don't want to hold it for too long, or at least you just want to hold it for like, you just want to hold 50% or 30% of it. Okay, and of course there are exception case whereby where the share issue is really little. If this counter, the share issue is really little, or the catalyst is so strong that people, they really don't want to sell it, so it's just forming a very small consolidation. Okay, but for me to be safe, then I will really either avoid this trade, or I would take a really small position and try it out. Okay, so we can see it formed the bullish reversal signal and the breakout. So this one we need to base on the breakout of the high, because the retracement is not as deep to 61.8%, 50% or 38.2%. It's just near the top, so we really need to break off the top, then only we go in. Okay, at 1 ringgit 24 cents. Okay, so on this breakout of 1 ringgit 24 cents, it went up 40.5%. Okay, it went up 40.5%. Still, for this trade, although on the high side, I can see, wow, it rallies so much. If I trade small, then I'm gonna lose a lot for not making all this money. Okay, but still I'm not gonna be regret, because I seen too many cases whereby the pullback is shallow and breakout, it normally just the uptrend truncate, the upward move truncated in between. Okay, this is one of the exceptional case whereby it really performed and went as high as 40.5%. Okay, so for you guys who are trading on momentum, all this, you can trade on this kind of patterns. Okay, but you have to be careful. Okay, all right. Okay, so so we have gone through all this case study, and right now we come back to the question and answer section again. Okay, so you can ask some of any of your questions. Okay, we can go through some of the charts also if you want. Okay, but if you don't have any questions, or if you guys want, I also prepared another case study on Heng Yuan to look through it. Okay, if you guys have no questions, so it's up to you guys. Okay, if you have questions, you want to know some of the stocks, all this, then we can go through the charts for all the stocks. Okay, Reza is asking for Fibonacci for the target price projection. You can look my last month section on extension and projection, and that one is for the target price. Okay, my colleague share the link above. Okay, at the comment above, so you can use that. Okay, to decide when to buy. Mr. Lee, okay, do we always use Fibo on daily candle chart to decide when to buy or sell? Basically, I use it to decide to buy, because for Malaysia stock market, most of the time we are buying, we are not doing short selling. Okay, so when I see the potential of this counter, it can continue to move higher, and I want to find a way to enter on the pullback, then I will use Fibonacci to buy. Okay, then when to sell. Okay, you can for the sell part, you can based on the for the sell part, you can look at the video for my Fibonacci extension and projection to find where are the levels to sell. Okay, Dave, yeah, the above 100% is I use it for extension and also projection. Okay, so watch the video, then you can see how we can use the 123.6%, 161.8%, 261.8%, 423%. How can we use it? Okay, so first, Eddie is asking about DuFu. So let's look at DuFu. Okay, so let's look at DuFu. Okay, so we're gonna do some of this reading. Okay, so one difficulty that many they encounter is, okay, for DuFu we can see, if we scroll all the chart all the way back, we can see, wow, this one we can say this is the uptrend, the uptrend for the whole move. Okay, this is the we can plot from right here, okay, all the way down. Okay, we can say, yeah, I plot right from this high to all the way down, because I see this is a very strong move. Yes, you can. Okay, but do aware that this move from here until here, it is more than a year. Okay, so it's a very long time frame kind of trading. Okay, so it depends on your trading strategy. If you're trading time frame, if you're trading in a very short term trading time frame, then you really want to focus on a shorter swing. Okay, so for example, if I'm trading in this on this daily swing, okay, let's say I missed this upward move. Okay, previously DuFu has a very strong selling down, and then in March the price start recovering. Okay, and I didn't realize it until it hit the high and start retracing again. So at this point of time, when the price is retraced, I start plotting from the high, okay, to the low right here. Okay, okay, so we can say obviously this is the upward swing, this is the current swing, and we can see the price it pulled back all the way to the 50%. Okay, at 50% right here, this bar right here, the very first bar, when it comes to 50%, it formed a hammer, inverted hammer, long bar, rebound. Okay, so you might buying around some ringgit 4, ringgit 09. Okay, if we break, then unfortunately you need to you will stop out, and again it form another hammer, reverse again, re-break. Okay, so this time if you're afraid that you have one stop loss, and this the second round you're afraid that you might have another stop loss, then you trade smaller. Okay, still if we follow the principle, we buy again at 4 ringgit 15 cent with a stop loss right here. Okay, and of course if another time you buy it here and then hit the stop loss, then you really want to stop for this counter. Okay, because every time when it rebound, the bullish reversal rebound, it came all the way back down. The selling pressure is really strong. Okay, so but unfortunately for this time, when we are buying, we are buying on this reversal and the breakout at 4 ringgit 60 cents, it went all the way up. Okay, it went all the way up near to the top. Okay, at 4 ringgit 45 cents. All right, so you can see this will be the very first entry that it will result in cut loss, and this will be the second entry that we go in. Okay, so after you took profit, you still want to trade. Okay, you still want to trade. Some of you guys might say, I still want to trade. I want to trade a very short time frame one. Okay, I trade like this. Okay, can I trade like this? This is also a rally ma. This is also pullback and then breakout. Yes, you still can trade on the, but because you can see this pullback reversal, because this is a very short swing. Okay, reversal pullback, then you are buying at the breakout of 4 ringgit 46 cents. That you are seeing that it will break the historical high and continue to go higher with a stop loss at 4 ringgit 07. Okay, so we can see the price continue to move higher from there. Okay, so as we are seeing that the price continue to move higher, but in the process, actually right here we are seeing the price every time we move higher, it has a very deep pullback. Move higher, have a very deep pullback. The uptrend is not really that strong anymore. If you realize the selling pressure are pretty much really there. Okay, one of the reason may be because it's already it breaking the high. Okay, it's overlapping right here. So for the when I'm trading right here, although I still can say that if I want to trade Fibonacci retracement, I can say this is the swing. Okay, this is the swing from here to here all the way, and I'm looking to buy. Okay, I still can say that, but if I'm seeing that the momentum is slowing down, okay, because we can see that it's overlapping. Like I said, every time we pull back, it is very steep. And another thing, we can see that the price is continue to go higher, but the volume, you can see the volume is actually decreasing, diminishing. Okay, so I don't feel good about the momentum on Dufu actually. Then although I still see the uptrend, then I will stop trading on the buy side already, but I will wait and see how is the development on Dufu. Okay, and Glowtech. Okay, Glowtech. Okay, if we look at Glowtech, we can see Glowtech is a very good example for the impulse wave. Okay, we can see this is the impulse. Okay, this is the impulse. Okay, if we take from the high until the low right here, at this point of time we are seeing the price has retraced to 50%, and this for the first time it hit 50% and then it reversed. Okay, it reversed, touched 60.5%, previous candle didn't break out. Okay, it didn't break out, and another selling down. Okay, so if from the reversal signal didn't break out, we didn't buy. All right. Okay, so for another pullback, so again, if it form another bullish reversal right here, all right, then we know that this 50% at 52.5 cents is a very strong level already. Okay, So once it is forming if it tests the 60.5%, not breaking up, again pull back, and this time it's forming a higher low, and finally we see the breakout of 60.5 cent breakout, then we know that this breakout will be a very strong one. Okay, so what I'm saying is, if it's again form another rebound, okay, then maybe pull back, here, and then only breakout, then we know that this breakout right here is a very strong one. Okay, but of course we need to see what's the development right here. If this on tomorrow for Glowtech is another long red bar down, breaking below 38.2%, then I'm not too eager for buying anymore. Okay, if the price drop beyond 38.2%, I will be really conservative on this counter, because I will see that the pullback is a little bit too steep already. A pullback more than 38.2%. Okay, more than 38.2%. The pullback is a little bit too steep. The selling is so strong that it might become the reversal of the trend already. Okay, all right. Edward is saying about high tech. Okay, if we look at high tech, he's saying high tech 1 minute chart. Okay, high tech 1 minute chart for today. Okay, high tech 1 minute chart for today. Okay, for today, okay, so I believe what he is referring should be the high until today's the opening low. Okay, 50%. Okay, we can see after it hits the 50%, start reversing. Okay, starting not touching the low already, and break out the long bar coming in and reversal. Okay, even the first time when it reversed to 50%, it also formed a very strong rebound. Okay, so like I said, if the stock is active enough and is really volatile, then you can even apply it on the M1, okay, on the 1 minute chart. Okay, so for super dynamic wise, okay, I believe I understand that many of you guys want to look at super dynamic. Okay, but like I said, it's a trend trading tools. It's a trend trading tools whereby, unless you are saying that you're gonna plot this one for the downtrend, okay, unless you are saying that you're plotting this for the downtrend, okay, that meaning if we pull back to 61.8%, then you might expect a reversal, or 50%, then you might expect a reversal. Okay, but if you really want to use it, you can use it like what just now how we did it is, you use it on the maybe not 1 minute, maybe 15 minutes chart. Okay, maybe 15 minutes chart. Okay, we can see on 15 minute charts recently, super dynamic had a rebound. Okay, the rally, let's say we start from the bottom right here, then we can see from right here right now is challenging the 50% support 50% area for the Fibonacci, 50% of this whole rally. Okay, of course, if you really want to say the momentum starts here, then you can shorten it to here. Okay, then it is testing 38.2%. Okay, so for 43 cents, this level I assume it should be a stronger level for super dynamic at this time. Okay, but of course, when you're doing this, you need to be aware that super dynamic on a overall trend is on a downtrend, is on a really strong downtrend. Okay, Okay, if we look at tri mode, actually I'm looking at tri mode for tomorrow trading also. Okay, I'm looking on tri mode. Tri mode looks very interesting with the move. Okay. Okay, if we look at tri mode, okay, if we look at tri mode, and it depends how you look at it. If I'm looking at a very short term, I would say this is a very short move that I'm looking at it. Okay, a very short move that I'm looking at it, and this is a bullish engulfing reversal from 50%. Okay, so I will be trading a very fast one right here. Okay, but if today I'm looking at the whole swing wise, okay, the whole swing, then right here we can see this is the rally. All the way up right here is the rally. The pullback is a little bit too deep right here, although we have the reversal. Okay, we have the reversal. Okay, but I will still have a little bit constant. Okay, so for this trade I will really do based on the reversal right here, based on the bullish reversal right here, for a very short trade. Okay, so you can see when you are doing it, when you're doing it on the Fibonacci chart, all this thing, you can really play along with it, but you need to understand the gist of it, the how you can use it, then you can play around with it a lot. Okay, so I'm just gonna take I'm just gonna demo on another one or two. Okay, so that we don't spend too much time. Okay, so just now I saw a few asking about sense of. Okay, if you look at sense of wise, okay, if we look at sense of, we can see this is the recent upward move for sense of. Okay, if we pull from top to the bottom, okay, we can see sense of for this move is supported at 50%, and we see a bullish engulfing signal right here, tested the high. Okay, so immediately after testing the 50%, it form a bullish reversal, it tests the high. Okay, you can see if you're buying on the bullish reversal, immediately you have a very short-term trade. Okay, and right now again it rejected a 54.5 cents, so we have to look at how it gonna test the 50% this support level. Okay, how it gonna test this level. Okay, so for Pelican, yeah, Pelican had news, and then it was, so for Pelican right here we can see, if we plot from the high to all the way down to the low, we can see today candle is all the way pull back to 30.2% already. Okay, so you can see this is a very high volatility stocks. Okay, but of course if you're trading short term, trading a short term, you very interested in trading these stocks. If you see there are some rebound from 30 tomorrow from 38.5 cents, or slightly test below 38 cents, start rebounding above, then you might want to trade a potential rebound from 38 cents area. Okay, you might want to test a short-term rebound. Okay, but of course you need to know that the volatility is very high, and if you're buying here, you are buying after a very steep pullback, whereby there could be still some seller right over there, selling pressure could be still over there, then you really want to strictly follow your stop loss, okay, at the low. All right. Okay, so the last one that we gonna look into for the live cases example will be the Mr. DIY. Okay, so if we look at Mr. DIY, okay, the first thing that we realize about Mr. DIY is the price start trading below the 20 days moving average. It starts turning down already. Okay, and we identified it as the high. Okay, then the next problem is which is the low that we should be using. Okay, basically we can see right here we have this one of the low, significant low, this is another significant low, and then this is the another one. Okay, these are the three lows that are significant. Okay, obviously you cannot use this one, okay, because the price has already traded below this this low already. Is turning into a mild downtrend. Okay, so we can use this one right here, this low over here. Okay, we can use this low over here and take and bring it into a more towards like a medium swing kind of thing. Okay, so when you're plotting this, you can see that this is a swing of 2 months. Okay, 2 months right over here. So you are expecting the retracement move. It can take quite some time. Okay, because the rally that we are plotting here is 2 months. Okay, the time frame, it affect each other. Okay, so right here we can see the price has retraced to the 50% area. We have some bullish attempt, but it failed. Okay, bullish engulfing right here, try to rebound, another bearish engulfing, immediately the reversal come in. Okay, unless we continue to see some stronger significant bullish reversal signal right here. All right, otherwise this support at 50%, it might continue to go lower. Okay, so if you bought around here, then you know that if it break below 35.5 cents, then you want to cut and see if it gonna hold at the 3.44 cents and rebound. Okay, if it's not holding and continue to trade lower, then you know that you are in trouble. Okay, then the next that you want to look into, you might really have to look into a much longer trend kind of view. Okay, then the time frame for this trading will be take a much longer time, because you can see from here it's October all the way until April. Okay, that's more than 6 months. Okay, and we have much more space for it to come down to 3.27 cents. Okay, so at this point, if the price didn't hold at this area, then it might come to 3.27 cents, and also the 38.2% is 3.44 cents, around that. Okay, so this will be for the Mr. DIY. Okay, so I believe you guys have gone through enough examples on how to put up this Fibonacci on the charts, all this thing. Okay, and I hope that this section has been useful for you guys. So if we go through really fast on some of the case study that I've prepared for you guys, like on Heng Yuan. Okay, we can see that this is a buy setup, rally, pullback, hammer, reversal. Okay, reversal, and then we can see it continue move higher. Okay, and then after this move, so you can see when the trend is there, when buying move is there, we can continue to plot the next upward move. Okay, pullback, reversal signal again, then you buying. Okay, 6% from here. Okay, next again you plot the upward move, pullback. Okay, reversal, breakout of the high, you buy again, and that gives another 8%. Okay, so from here we can see that the reversal is so strong that it reversed the previous trend, the last upward move. The pullback is so strong. So by what I was demonstrating just now, so this upward swing is really truncated. What we can take is, we can take a bigger swing right over here. Okay, we can see this, the reversal, the short-term trend truncated. We take a bigger swing. Okay, and we found that it formed a piercing. Okay, a piercing from 38.2% and reverse. Then we buy again, and it's a strong up move from the mid swing, 37%. Okay, similarly again, pullback, form a hammer, reversal, then another buy. Okay, and for this one, it takes so long until for it to hit the high right over here before the trend really turned down. Okay, so it gave us 9%. okay, although in between we almost cut loss. So at this juncture, we really concerned that the buying momentum seems really weak. Okay, so in between I might just scratch out the position in between, or even take early profits for this kind of setup. Okay, but if we still insist that we want to buy on this weaker momentum, okay, we still can plot from the low to the high, and then the pullback, we can see this is the bullish reversal. Okay, if we can buy, after we buy, we can see immediately it hit the stop loss. Okay, it hit the stop loss. Okay, until it form another pullback and we break of the high, then we see another strong move. Okay, so these are some of the examples to share with you guys. So hopefully after this section, it helps you guys to understand how to use Fibonacci and in a more clearer way. All right, okay, so if any of you guys found that our sharing is really useful and it helps, do share our post, like and follow our Facebook page, and also if you have any friends who want the Mandarin version, I will have the Mandarin section on next Tuesday. Okay, so do watch out for our Facebook page and like and follow so that you will be informed. Okay, Inchip Muhammad Shamin. Okay, so when you're plotting from the top to the bottom and bottom to top, actually the range, they are still the same. There won't be much difference. Okay, there won't be much difference over there because the range, they are the same. Just that when you're plotting, if you're using our M plus with slide charts, when you're plotting from the top to the bottom, then the 100% will be at top, and those percentage beyond 100%, it will be at the top. So when you're using the Fibonacci projection, or when you're using Fibonacci extension, then it will be easier. Okay, so that's why I make it a habit to plot from the top to the bottom. Okay, but actually it doesn't make any difference because the range, they are remain the same for the top and the bottom. Okay, so if there's no other question, then I will call it a day. Okay, so thank you very much for you guys to join the section. Thank you your time, and I wish you guys a very good night. Okay, stay safe, stay healthy, and have a good body. Okay, thank you very much. Bye bye.